All right, buckle up, everybody, because today we are going to dive deep into VRL logistics.
Deep dive is right.
You guys gave us a mountain of info on this
Wait,
company.
seriously, a ton.
Everything from official company filings to some crazy in-depth investor analysis.
Well, yeah.
So we're talking about a company that's like a big deal in India,
Huge.
moving goods all across the country.
Hmm.
But here's the thing, they've got this super interesting history that goes way beyond trucks.
Way beyond you're telling me.
It's not your typical trucking company story.
No, not at all. Like you said, it's really interesting.
So let's unpack this whole thing.
Let's get into it.
First things first.
Right on me.
VRL is the only owned asset player in what's called less-than-truckload logistics in India.
Oh, yeah, that's a mouthful.
I know that sounds a little bit complicated,
Yeah.
but it's actually really important to understanding how their whole operation works.
Yeah, it's fundamental. To break it down, logistics is basically the movement of goods.
Okay, so moving stuff around.
Right, and in this case, we're talking about stuff that doesn't fill up a whole truck.
Okay, so smaller shipments.
Right. Think of it like a puzzle,
Oh, okay.
where VRL has to figure out how to get all these smaller packages
Mm-hmm.
from point A to point B
Right.
as efficiently as possible.
That sounds tricky.
It's a logistical challenge, for
Yeah.
sure.
And
Then the owned asset part.
yeah, what does that even mean?
That means they own their entire fleet of trucks.
Wow, so they're not outsourcing.
Nope. Which is pretty unusual in this industry.
Really? So they're controlling the whole process.
From start to finish.
Interesting.
That's a big operation.
That's pretty impressive.
It is. And, they've been making some big moves lately.
Yeah, like what?
Like selling off their passenger air transport and wind power businesses.
Oh, yeah, I remember reading about that.
Yeah, that was back in July 2023.
So they were doing airlines and wind power.
They were. Wild, right?
That is pretty wild for a trucking company.
It is. And they did it in a way called a slump sale.
A slump sale? What's that?
Basically, it means they sold off those entire divisions.
The whole thing?
The whole thing, all at once.
Okay.
Instead of breaking them up and selling them piece by piece.
So it's like a bulk sale.
Kind of. It can be a faster way to get a deal done,
Makes sense.
but it also means you might not get the best price for every single asset.
Interesting. So it's a trade-off.
Exactly.
So I guess the question is, why did they do it that way?
That's a great question.
What was their strategy?
Well, their June 2024 quarterly report actually shows that they made a profit from those sales.
Oh, so it wasn't a fire sale or anything.
Doesn't look like it.
Maybe it was a pretty savvy move then.
It could have been.
It definitely makes you think.
It does. It seems like they're really trying to streamline their operations and focus on what they do best.
Which is
Moving goods.
right back to the core business.
Exactly. And you know what? Their financial performance seems to be backing that up.
Oh, yeah. Tell me more.
Their revenue is up year over year.
That's always good to hear.
It is. And get this, they reported a profit of 193 crores in the quarter ending December 2023.
Whoa, 193 crores.
Quite a lot of rupees.
That's a serious chunk of change.
It is, but I'm always a little cautious about just looking at raw profit numbers.
Yeah, I get that.
What about their operating profit margin?
They're what?
Their operating profit margin, or OPM for short.
Okay, OPM. Got it.
That seems to be the metric that investors really care about.
More so than overall profit.
It gives you a clearer picture of how efficiently they're making money.
Okay, so break it down for me. What is this OPM all about?
Basically, it tells you how much profit a company makes for every rupee of revenue
Okay.
after you take out their operating expenses.
So it's like profit per rupee.
Exactly, like profit efficiency.
Interesting. And what's VRL's OPM looking like?
Well, their OPM jumped from 12% to a solid 17% in the quarter ending September 2024.
So they're getting better at turning revenue into profit.
That's right, they're becoming more efficient.
That's a good sign.
Definitely a positive indicator.
Especially for anyone thinking about investing in VRL.
Absolutely. And speaking of keeping investors happy,
Uh-oh, what do they do?
they announced a dividend of 5 sparsels per share at their November 2024 board meeting.
5 rupees per share? Not bad.
Not bad at all.
So what does that mean for investors? Why are dividends such a big deal?
Well, a dividend is basically a way for a company to share its profits directly with its shareholders.
So it's like a little bonus for owning their stock?
You got it, a little thank you for investing in them.
Makes sense.
But the size of that dividend can actually tell you a lot about the company's financial health.
Oh, really? So a bigger dividend means they're doing better.
Well, it could mean they're feeling confident about their future prospects.
Interesting. So it's like a signal to the market.
Exactly. They're saying, hey, we're doing well enough to share some of our profits with you.
Makes sense.
But, something else caught my eye in the screener report.
It's that.
VRL's promoter holding has been decreasing over the past 3 years.
Promoter holding, what is that?
Promoter holding is the percentage of shares held by the company's founders,
Okay,
or like key management people,
got it.
and a decrease in promoter holding.
What could that mean?
Well, it could mean a few things. Maybe those early investors are just cashing out some of their holdings.
So they're taking some profits off the table.
Right. Or maybe it could mean they're not as confident in the company's future as they once were.
Yeah, I mean, it's not necessarily a bad sign, but it's definitely something to keep in mind.
Yeah, it's a piece of the puzzle.
Speaking of puzzle pieces, let's talk about that share buyback they did earlier this year.
Oh, yeah.
They bought back 875,000 shares at 700 each.
That's a lot of shares.
I know, I've always been a little confused by share buybacks.
Yeah, a lot of people are.
It seems like the company is basically buying from itself.
Right, it's kind of like they're taking money out of one pocket and putting it in another.
Exactly. What's the point of that?
Well, it might seem counterintuitive, but share buybacks can actually be a pretty smart move.
Really? How so?
Think of it like this. When a company buys back its own shares, it reduces the number of shares available out there on the market.
So less supply.
Exactly. And less supply can lead to higher demand.
Okay, so basic economics.
Right. And that higher demand can push up the price of the remaining shares.
So it's a way to boost their stock price?
It can be, and it can also boost earnings per share,
Earnings per share.
which makes the company look even more profitable to investors.
Interesting. So it's a way to kind of make themselves look better.
You could say that.
But I guess the question is, why would VRL choose to do this now?
Yeah, that's the big question.
What does it tell us about their financial strategy?
Well, remember, we talked about how they're streamlining their business, focusing on their core strengths.
Right, getting rid of those other businesses.
Exactly. And this share buyback kind of fits into that strategy.
How so?
It suggests that they believe their shares are undervalued.
So they're buying them back because they think they're a good deal?
That's one way to look at it.
It's like they're putting their money where their mouth is.
Yeah, exactly. They're saying, hey, we believe in our company so much that we're willing to buy back our own stock.
That's a pretty powerful statement.
It is. And it's not just about boosting the stock price in the short term.
What else is it about?
Share buybacks can also be a way to return value to shareholders.
Oh, I see.
Instead of paying out dividends, they're essentially giving investors a capital gain.
By increasing the value of their existing shares.
Exactly.
So it's like a different way to reward investors.
It is, and it can be a very effective way.
That makes sense. But let's shift gears for a minute.
Sure.
And talk about the bigger picture here.
Okay, what are you thinking?
We can't ignore the fact that India's e-commerce sector is exploding right now.
Oh, yeah, it's huge and growing all the time.
And all that online shopping means there's more demand for efficient logistics.
Absolutely. That's a huge opportunity for companies like VRL.
Which seems to play right into their sweet spot.
No doubt about it.
So this is where things get really interesting.
It does. Tell me more.
You've got VRL, this established player, with a deep understanding of the Indian market.
Right.
And a strong foothold in the less-than-truckload segment.
They're the leaders in that space.
Exactly. And now they're strategically positioning themselves to ride the wave of this e-commerce boom.
Smart move.
So are we talking about a potential gold mine here?
Well, it's definitely a huge opportunity, but we also have to remember that no investment is a sure thing.
Right. There are always risks.
Exactly. And the logistics industry in India is becoming increasingly competitive.
More competition.
New players are popping up all the time, and technology is constantly changing the game.
So VRL can't just sit back and relax.
No, they need to keep innovating if they want to maintain their dominant position.
What kind of things do they need to do?
Well, they need to be laser-focused on optimizing their operations.
Make everything as efficient as possible.
Exactly. And they need to embrace new technologies.
Like what?
Like AI and automation.
So they can keep up with the times.
Exactly. And they may even need to form strategic partnerships.
To expand their reach.
Right. And they need to be adaptable.
Be able to change with the market.
Exactly. They need to be ready for whatever challenges and opportunities come their way.
Okay, so we've talked about VRL's financial performance.
We have.
Their strategic moves. And the potential impact of this e-commerce explosion in India.
It's a lot to take in.
I know we've covered a lot of ground here.
We have.
But I imagine all this financial stuff can be a bit overwhelming.
Yeah, for someone who's not a financial expert, it can definitely be a lot to digest.
Exactly. So let's try to break it down for our listeners.
Okay, good idea.
What are the key takeaways they should walk away with from all this?
All right, let's simplify things. Okay, so big picture VRL is a major player in India's goods transportation sector.
Okay.
And they're going through some changes.
Yeah.
Focusing on what they do best.
Trucking?
Exactly. And getting rid of anything that doesn't fit with that core business.
Like the airlines and wind power?
Exactly. And their financials are looking pretty good.
Yeah.
Revenue's up. Operating profit margins are up.
All good signs.
Definitely. And they're doing things to keep their investors happy, too.
Like those dividends we talked about.
Yep. And the share buybacks.
Right. So it seems like they're pretty confident about their future.
They seem to be, but,
What?
there are always risks.
Oh, yeah, for sure.
The logistics market in India is really competitive.
Lots of other companies out there.
Exactly. And new ones are popping up all the time.
So VRL can't just relax.
No, they got to stay ahead of the game.
Innovate, adapt, all that good stuff.
Exactly. And that brings us to a really interesting question for our listeners.
Okay.
Given everything we've talked about,
Mm.
the growth of e-commerce, the demand for logistics,
Oh, wow.
what does it mean for VRL's future?
Yeah, what does it mean?
Can they keep dominating the market, or will new players come in and shake things up?
It's a good question.
And how will they handle all the challenges and opportunities that come with operating in a fast-growing economy like India?
So many factors at play.
It's a complex situation, but it's also super exciting.
Definitely keeps things interesting.
It does, and I think that's one of the big takeaways from our deep dive today.
What's that?
VRL's story is a great example of how a company can adapt and evolve to stay competitive.
They're not standing still, that's for sure.
No, they're not. They're making moves, taking risks, and trying to stay ahead of the curve.
And for investors,
Mm-hmm.
it's a reminder that things are always changing.
Absolutely.
You got to do your research, understand the company, and look beyond just the headlines.
Couldn't have said it better myself.
So to all our listeners out there, keep digging, keep learning, and most importantly, keep asking questions.
That's what it's all about.
The world of business and finance is constantly changing, and there's always something new to discover.
And that's what makes it so fascinating.
Absolutely. So thanks for joining us on this deep dive into VRL logistics.
It's been a pleasure.
We hope you learned something new and maybe even got inspired to explore the world of logistics a little bit more.
We'll see you next time.